Trades right here on ET Now, and Pranav Amin, the MD International Business at Alembic Pharmaceuticals, joins in on the show right now to talk about how their quarter was and what's the visibility going forward. Pranav, hi, morning. Great to have you on the show. Your revenues have seen a growth of about 14%. Can you talk about how the domestic revenues were in specific and whether it was the specialty business within that outperformed?
Yes. This was an interesting quarter for the company. We grew our revenue at 14%. If you see a breakup of the verticals, the US business grew at 20% in the quarter versus the ex-international, which is the other international business, grew at 9%. And the domestic, if you take out some of the one-time COVID opportunities, it grew at 11%. And more importantly, the API business also outperformed quite well with a 23% growth. In terms of India, the performance is very good. The specialty grew much faster than the market, and we've grown faster than the market in the other areas as well.
You know, Pranav, a lot of pharma companies are facing issues of margins, pressures because of the cost surge. Help us understand what happened with you specifically in the second quarter.
So, to be honest, most of the issues are not related to sourcing and supply. One of the reasons why we are finding the pressure on margins compared to last year is due to the intense price challenges in the US market. We're seeing a lot of oversupply in the market, and hence there's a lot of pricing erosion in the US market. Of course, there's a cost pressure as well over the last couple of quarters, as we've seen the transport and logistics costs have gone up. But apart from that, it's been the pricing that has really caused a squeeze in our margins in the US market.
Okay, so just taking away from that point that you just made, what is then the outlook for sourcing as well as supply for the second half? And do you see things getting better?
I think I don't believe there's going to be a fundamental change. The US market still has a lot of supplies. India business is recovering quite well and growing quite well over there. The API business had a fantastic growth at 23%, and I expect them to continue growing in the next few quarters. The rest of the world business also will grow in high single digits for the rest of the year.
All right. Morning, Mr. Amin. What is the US quarterly run rate maintained at, and does $50 to $55 million look maintainable per quarter?
No, so actually we are at about 45 to 50 million. That's the rate that we are at currently for the US business. We have a few interesting launches coming up in the next couple of quarters. Hopefully that will help push up this 45 million, 50 million range if there's not much further erosion. What is more interesting for the US is we have two injectable facilities which are both audited. While we haven't got the formal approval, but the product approvals have started flowing through from those facilities. We have a general injectable as well as an onco injectable. So we should start commercializing both of those in Q4 onwards.
Okay, given the fact that the company has recently received the second injectable product, ketorolac, approval from the General Sterile facility, what are the dynamics of these drugs? What can we expect on the back of this?
So the ketorolac is a product, it's an injectable product in the US. There are a bunch of players there, but it's been in shortage for a long time, actually. And this was the product that triggered the audit for our general injectable facility, which is the first product that we had filed from there. And it's in shortage in the US. So it should be an interesting opportunity because it's perennially in shortage. Apart from ketorolac, we also received product approval for glycopyrrolate from the same facility. Apart from this, on the onco injectable, we received approval for paclitaxel injection.
Right, Pranav, great to have you on the show, and thank you for taking the time out and speaking with us today on